Kuaishou is benefiting from being it's a tech company, and tech has been a hugely outperforming sector. It's also the first purely short video company out of China to go public. So in that sense, it's benefiting from scarcity value, given that its much larger rival, Douyin, owned by ByteDance, is still private. And so if investors want to get into this sector, then Kuaishou is their only option for now. Also, it was one of the pioneers of the short video format, so it's certainly one of the bigger names there. And then obviously there's a lot of liquidity in the system, and that has been causing lots of IPOs to be massively oversubscribed as people look for returns. Interest rates are super low, so this means that new stock issuance has been performing extremely well. It's been extremely popular with investors, and so for sure Kuaishou is benefiting from that to a certain extent. It's picked a very good time to go public.
Yep, and that's why you guys are extremely busy as well. Julia Fioretti, their equity capital markets reporter. Kuaishou, quick hands. You better have your hands quick here. When this hits the market, a couple of minutes away from the open, liquidity, Julia mentioned that as well. We're a little bit lower here on your money market, your repo rates. But then again, Tom, you look at these levels, they're still quite elevated compared to where you are, say, a couple of months ago. Moving averages are still pointing up.
Yeah, another injection as well from the PBOC in terms of 7-day repo at around 80 billion yuan at 2.2%. We've got Hong Kong retail sales. They're going to be out later today. There's an expectation they're going to fall about 15%. And of course, you have the earnings of Alibaba and Ping An Healthcare to look at as well. We know that in the pre-market, Alibaba is in the green. There's some upside there for the stock. We'll see what happens with the earnings, of course, amid this regulatory focus. And of course, the economic picture here in China as well. Plenty more ahead. Stay with us. The open is next. This is Bloomberg.
To the U.S. National Committee when it comes to the relationship between Washington and Beijing. A couple of lines coming through. Latest ones being here that the U.S. must stop interfering in Hong Kong, in Xinjiang, and in Xizang, that is Tibet, and the U.S. must stop harassing Chinese students and also curbing media. Some strong lines here, Tom, coming out.
Yeah, that's Yang Jiechi outlining the areas, of course, that China sees essentially as red lines, but also saying that they want to have a constructive relationship, that this is a key point, a key moment in terms of US-China ties, that China is prepared to work with the United States, and also highlighting the damage, as China sees it, from the Trump administration and their policies. We had a strong day in terms of the markets yesterday here on the mainland. The futures were pointing up, and here you're seeing the CSI 300 below that 5,500 level, but gains of 0.2% so far in the first few seconds of the open. Shanghai Gong also in the green, and the China posting gains of 0.6%. We had that injection of around 80 billion yuan of 7-day reverse repos. We know that the overnight rate has come down somewhat. As David was saying, though, it's still relatively elevated. There's an expectation from some in the market that you'll see more injections from the PBOC, maybe even an unscheduled MLF operation, but that is yet to be seen. In terms of what's happening with the currency, it was slightly weaker, again, on the expectation of additional liquidity, and also that PMI data pointing to a weaker or more fragile economic recovery here. 646 is what you're seeing in the offshore, essentially in line with the onshore price as well. The 10-year is at 317. David.
More lens coming through. The U.S. politicians, Yang Jiechi says that must not use the COVID situation to stigmatize China. Just to get you guys updated on that, you're looking at that, of course, against the backdrop of the open, as Tom was pointing out. A lot more gains we're seeing here in Hong Kong. Tencent is one to watch today on the back of some praise coming through from the State Council. That's one, obviously, of risk appetite coming back. Alibaba, earnings coming out. We'll talk about that soon. A couple of other names, of course, Hong Kong exchanges. Why? Why not, right? Kuaishou coming to market on Friday. $250 is the price, according to sources in the gray market. In Mongolia Mining, that's a silver-related name. They're up about 3% on the back of that massive move up we already had yesterday. Very quickly here, just some research to tell you about. I'll make this quick. You have Telemer identifying some potential candidates listed in Hong Kong. These are the 5 that might be the potential beneficiary here of a short squeeze that they say is probably coming to these names. Tom.
Yeah, look, Alibaba earnings always of interest, of course, but particularly now, given the changing environment when it comes to regulations. Alibaba set to unveil its slowest pace of third-quarter sales growth in 5 years when it reports earnings later. But a bigger concern is Beijing's regulatory crackdown. Bloomberg Intelligence says that while the coronavirus pandemic may have boosted spending on Alibaba's e-commerce platform, investors may be more interested on the impact of, quote, regulatory noise, including the suspension of Ant Group's IPO, of course, and China's antitrust probe. Here is a look at a roller coaster quarter for the world's largest e-commerce company.
China's financial sector is a young industry that does not have a mature ecosystem and is not fully moving. So today we are a country that bears the risk of lacking a healthy financial system.
Regulators have summoned Jack Ma and other Ant Group executives for a rare meeting ahead of the world's biggest IPO.
The suspension of Ant Group's mega IPO shocking investors.
It's not surprising as they become big and very prevalent across the Chinese consumer market. That regulation is catching up a little bit.
You have this very charismatic, very powerful Chinese entrepreneur in a state capitalist authoritarian system that has no interest in that. But it's also because Ant Financial is the most important fintech company in the world.
China has unveiled new anti-monopolistic regulations.
I don't think this is a surprise. As you know, the Chinese market is in the process of constantly regulating.
And also depends on how the company reacts to the changing regulatory environment.
The way that Jack Ma has recently been apparently treated, the Chinese make a distinction between the private sector and state-owned enterprises.
He has appeared in a video after months of speculation about where the billionaire tech giant may be. Now, this is a video to educators in China.
One can't disguise that this has been a considerable shock. It was a very dramatic event. Once the problem solved, it will go back to the track to continue consideration according to law.
Fantastic piece there. And if you guys didn't notice, sort of Lord of the Rings background music really adding to the drama there. Certainly a very important story. Let's bring in Hao Hong, Wilcom International Head of Research and Chief Strategist here. Hao Hong, pleasure to have you on the show. We'll talk about broader markets in a while.